Most people think about capital in one dimension: money. They believe if they just had more money, everything else would fall into place. But here's the truth: financial capital is actually the weakest form of capital. It's fragile. Governments print more of it, inflation eats it away, and if you don't know how to put it to work, it disappears. Real wealth, real influence, and real staying power don't come from money alone. They come from stacking the different forms of capital together. And that's why I actually ended up creating the capital stack. And it's the 6 forms of human capital that you need if you want to raise money, build wealth, and become the kind of person that investors actually want to back. So let's break this down one by one. Number one is financial capital. Think paper assets. Like I said, the first and weakest form, which is the financial capital: cash, stocks, bonds, investments. Look, it is the fuel that accelerates the growth. But here's the thing: it's also the most fragile because governments can print it, inflation erodes it. And if you don't know how to put it to work, it dies. Now, look, money itself isn't wealth. It's just stored potential. So if you only rely on financial capital, you're one bad market cycle away from being wiped out. Think of it like gasoline. It burns fast, it's volatile, and without an engine to channel it in, it's actually wasted energy. I literally keep a $200 million Zimbabwe dollar bill in my office. It's right on my desk there. It's $200 million. And at one point, it was actually worth more than 200 million US dollars, believe it or not. Today, it's worth zero, not even the paper that it's printed on. To me, that bill is a reminder that cash by itself isn't wealth. So here's the lesson for investors: sitting on piles of money is a losing game. The people who actually win the game long term are the ones who put that financial capital to work in assets that outpace inflation. Number two is intellectual capital. So think knowledge and skills. That is intellectual capital: your ideas, your skills, your systems, your ability to solve problems. And look, unlike money, this actually can't get taken away from you. And here's the principle: money follows mastery. So the more specialized your skills, the more magnetic you're actually going to become with opportunities and investors and just choices in life. Now, for me, early on, I decided that the best investment I could ever make was myself. And I don't mean once I had the money, I literally mean before I had any money. So as a teenager, I literally spent a couple $100s to join Toastmasters, money I barely had at the time, because I knew if I couldn't communicate clearly, I'd always be capped. After that, I spent a couple $1,000s to go to conferences when I had nothing to sell or nothing to promote, no way to monetize that expense. But I just wanted to be in the room to gain exposure and to sharpen myself. Now, fast forward a little bit after that, when I broke into private equity, I literally worked for free. And I did it because I just wanted to be in the room and see how big deals were put together. See, that experience to me was worth more than a paycheck. Now, eventually I ended up getting paid, obviously, but it was the fact that I was willing to do it for nothing that I think got everybody's attention. Now, look, when I actually started making real money, I reinvested it. More conferences, masterminds, workshops, mentorship, coaching. I'd spend 5 or even 6 figures at a time just to get in the right room with the right people. And here's the thing: every dollar that I put into my skills multiplied far more than a stock or savings account ever could. And because every time I upgraded my knowledge, my personal stock became far more valuable. So think of intellectual capital like software. It upgrades everything it touches. The same dollar in the hands of someone with no skills disappears quickly, but that same dollar in the hands of someone with intellectual capital compounds infinitely faster. That's why I got recruited into private equity. It wasn't because I had the money, but because I had the raw skill set to raise it. And that skill opened the door to 9 figure opportunities. So here's the lesson here: don't just chase financial capital, invest in becoming the kind of person that attracts it. Number three is social capital. Think of who you know: your network, your relationships, your reputation, the trust that opens doors you can't buy your way into. And here's the principle here: capital moves at the speed of trust. And early in my career, I recognized this before I even had the words to explain what was going on. So, look, when I first started out, I was buying single family homes and duplexes and smaller properties. But I knew that if I wanted to play in the big leagues, the 200 plus unit apartment complexes, developing entire communities, I wouldn't be able to get there alone. And that's actually why I started working with MC companies and Ken McElroy and Ross McAllister. So for me, it wasn't just about doing deals, it was about building social capital. And because being in proximity with guys like Ken Ross, who have built thousands of units and controlled billions of dollars in real estate, That gave me additional social currency, especially in my early 20s when I could barely grow a beard, let alone fully articulate what it was that they were doing. And it elevated my credibility overnight. I learned from the right guys. And I went from being the guy who buys duplexes to the guy working with operators who build and buy entire communities. That's the power of social capital. It compounds, it rubs off on you, and it changes how people perceive you. And that perception is what opens doors. If you remember that 144 unit deal I talked about in Houston that I bought, I didn't get that on LoopNet or MLS. I got access to that deal because I was connected to the right people at the right time. For context, other people had that building under contract for 16 million plus and couldn't close. We closed at 11.1 million, and that's nearly a $5 million discount from day one. And it only largely happened because we had social capital. Now, here's the flip side. If your reputation is sloppy, if you don't deliver, if you're difficult to work with, people stop introducing you. And when introductions stop, your deal flow dries up. So social capital isn't built when you actually need it. It's built years before when you add value without expecting anything back. That's actually why referrals outperform cold calls every single time. Because when you're trusted, capital and opportunities find you. When you're not, you're stuck chasing, convincing, and begging people to do business. You don't want that. The fourth type of capital is spiritual capital, your purpose, your mission, your belief systems, the grit that keeps you moving forward when everything else collapses. Without purpose, money and success, they feel empty. And with purpose, pressure actually becomes fuel. And think of spiritual capital as your compass in the storm. When deals fall apart, when markets crash, this is what keeps you anchored and focused on what matters. For me, it was growing up in communist Poland. I mean, think breadlines, food rations. My dad was arrested for corn trafficking, corn with a C. Back in communist days, you couldn't have a business. So when my dad was smuggling corn into the country to sell it on the black market to feed his family, that was seen as a crime. Now, fast forward from that to moving to North America, where we came here with nothing but a few suitcases and a few dollars. We didn't speak the language. We didn't have a safety net. That survival, that grit became literally the foundation for everything that I've become here today. And investors, clients, they buy into that more than any spreadsheet. Everybody can look like a genius and a guru. But when things go sideways, that's when your spiritual capital shows up. It's what makes some people collapse under pressure, while others take that very same circumstance and turn that pressure into progress. The fifth form of capital is real capital, tangible, physical things you can touch. The anchors of value that protect you against inflation and uncertainty. But here's the thing, paper burns, bricks stand. And this is how real wealth survives across generations. And it's bigger than just real estate. I mean, you guys think I'm a real estate guy. I am. But real capital goes beyond just real estate. And I'm actually going to break down real capital into the four types of hard assets. So the first one is obviously real estate, residential, commercial, multifamily, storage, medical plazas. These aren't just properties, they're income producing machines anchored in tangible real assets. And because of that, they generate rent, they appreciate over time, and they give you a sense of control that you can't get with paper assets. Land and real estate is finite. You literally can't make more land. And that's why the wealthiest families in the world hold real estate forever. The second form of hard assets is natural resources, oil, gas, timber, water rights, potash, the stuff that makes food possible. You're talking about assets that underpin entire economies. And if inflation kicks up or currencies wobble, these assets hold their value because they are the building blocks of life. Literally, without these things, the world can't function. So, whatever the unit of exchange is or whatever form of money exists, it's always going to be used to trade for this stuff. The third form of real capital is commodities, gold, silver, copper, wheat, corn. These are the raw materials for civilization. And for thousands of years, people have used commodities to store value when money itself was unstable or just unavailable. Every time there's uncertainty, you'll see a flight to gold for a good reason because it's a hedge against inflation. It's a hedge against fragility of financial capital system that we all live in. And the fourth type of hard asset is infrastructure and other productive assets. So think about toll roads, ports, railways, equipment, machinery. Look, these things aren't sexy, but they're essential. They generate cash flow, they have replacement value. They're literally the backbone of every economy. So when I talk about real capital, I'm not just talking about an apartment complex. I'm talking about owning the kinds of assets that governments, corporations, and families rely on. And these are the things that hold their value no matter what happens with inflation, currency swings, or stock market chaos, because it is the underpinning of the real economy. And that's why wealthy families don't just own paper assets, they own real things. Because when the world changes, as it always does, it's the hard assets that endure. And finally, the sixth form of capital is health capital, your body, your energy, your vitality. Without it, every other form of capital collapses. Now, look, if you're in your 20s, you're going to think you're going to live forever, but take it from me, somebody who's now in their 40s, this becomes a real thing. In my 20s, I thought I could do this forever and operate at this level forever. As you hit your 40s or 50s or 60s, you realize very quickly that your health capital is essentially the most important form of capital. And here's the thing, the longer and sharper you can perform, the more you compound all the other forms of capital. So think of the health capital like the battery that powers the entire stack. You can have a Ferrari, but if your battery's dead, you're not going anywhere. Same with you. If you're burned out, unhealthy, distracted, nobody is going to work with you. Nobody's going to invest with you. And look, for context, I've been waking up at 5 a.m. since I was 22 years old. I work out, I supplement, I stay disciplined, not because I'm trying to flex on Instagram, but because I know that my clients, my team, my investors are depending on me. And if they see me being able to go the distance, that gives them tremendous confidence. Now, look, besides that, discipline in health signals discipline in your business. People can feel it. And if you want to play the game long enough to compound real wealth, you need the energy and longevity to keep going. So those are the six forms of human capital in my capital stack. Financial capital, which is, like I said, the weakest, but the one that we're all most after, which is money is just stored energy and a way to keep track of how you're doing in all the other parts of your life. The second form, like I said, was intellectual capital. It's your leverage engine, it's your skill sets, it's your IP. The third was social capital, which is that bridge of trust. Your ability to get things done in life is based on your social capital. The next was your spiritual capital, which is your compass in life. So when things are not going well, which happens quite a bit, you have a reframe and a purpose to keep going. Then came real capital, which is the actual bedrock of everything that endures in our society. And finally, the last and most important, in my opinion, is your health capital, which is the battery that powers everything else. Now, when you stack these six forms of capital, you literally become unstoppable, because wealth isn't just about money. Like I said, money is the fuel, but wealth is about who you become, what you build, and how long you can keep playing the game. So look, whether you're raising capital, whether you're an investor, whether you're building wealth for your family, whether you're building your business, you need to pay attention to all six. And the stronger your stack, the stronger your future. So if you want to keep learning how to build it, keep watching my videos, hit the subscribe button and follow along, because I'm going to keep stacking wins and stories around all six forms of human capital. I'll see you on the next video.